Hi everyone. Today we are going to discuss about the second part of the lesson and the most important thing, that is candlestick pattern. First of all, why we should know about the candlestick pattern. In the previous class we have seen about Dow theory. Dow theory will tell about the trends. In the same way, candlestick pattern will tell about the predominant force in the market. So what are the predominant forces in the market? There are only two forces in the market. One is bull and one is bear. So bulls always loves to buy at low and sell at high, or else they want to buy at high and they want to sell at higher high. What about the bears? Bears always they want to sell at high and buy at low. And the same way, they want to sell at low and they want to buy at lower low. So today we will see about the candlestick pattern. It will tell you about who is dominant in the market. What are the bullish candlestick pattern? First comes a single candlestick pattern, and second two candlestick pattern, and third three candlestick pattern. So what is the first candlestick pattern? First candlestick pattern is we call single bullish candle, or in some literature it is like Marabuzu candle. Whatever the name is, it is called a bullish candle. Let's see what is actually candle means. If you observe, every candle will have four parts. So the first part is open and the second part is close and the third part is high and fourth part is the low. So first one is open, close, third one is high of the candle and fourth one is low of the candle. And in the market, if you open the chart, you will see two type of candles. One is red and one is green. So what is the difference in this? Green candle generally represents a bull and red candle generally represents bear. So what is the difference you are seeing here is only a small difference. For a green candle, open is below compared to the close, and for a red candle, open is above. Open is above and close is low, below. And the low are same, and the low will be the same, and high, same way high will be the same. This is the basic of candlestick pattern. Coming to single bullish candle, here you will see green candle, and the green color part is called body, and below and upper we call it as a wicks or shadow. Anything we can call it is. A single bullish candle means a big green candle of moderate to medium size. Wicks may be present or not, it doesn't matter. But the wick should not be too high or too low. We will see next the two candlestick pattern. That is bullish piercing. Here the scenario is, condition is first there should be a red candle of decent size, and then again there should be a green candle. But the thing here is, if you observe this candlestick pattern, the middle part is called as a median of the candle. So if you see in a bullish piercing, always the close of the green candle should be minimum above the median. Okay, it is coming down and it is piercing. That's why the reason they call it as a bullish piercing. And one more thing, the second part of the two candlestick pattern is bullish engulf. Here the situation is same. First there should be a red candle of decent size and followed by a green candle. But what is the difference between piercing and engulf? In piercing, as I said, it should close above the median generally. In pierce engulf, it has to completely eat away the candle. That is a different. And always remember, open is always done by newbie traders, or you can call it as amateurs. What about the close? Close is always done by professional like us. So always concentrate on close. Whenever you are seeing, always focus on the close of the candle. Next comes the three candlestick pattern. Generally the word three means it has to have three candles. The first one, it should be a decent red candle. Second one, it can be any type of candle, whether it can be neutral or anything. Regarding neutral candle, we will discuss again. But the important thing is third candle. That is, third candle should be a green candle. And one more important thing is the close. As I said, close, we always focus on the close. So close of the candle should be above the median, as we seen about piercing. But the difference here and here is, it is two candlestick pattern, here is three candlestick pattern. Single candlestick pattern compared, it is less significant to two candlestick pattern. When you compare three candlestick pattern, it is more significant than the two candlestick pattern. This is about bullish. And now we will see about bearish. The same thing with bearish, they are also single, 2 and 3. The thing is, the color changes. Single bullish candle, it's a decent size or red candle. Remember, red candle open is above, close is below. In the same way, instead of bullish piercing, we will call it as a bearish piercing. Here, instead of red candle, there should be a vice versa, green candle, and here it should be a red candle. So simple, nothing to mug up. Here also, the close. Here, the candle will be up and the close should be below the median. In bullish piercing, close should be above the median. In bearish piercing, close should be below the median. And in bullish engulf, as we seen, it has to engulf totally the red candle. It has to, the first candle should be a green candle and the second candle should be a red candle. The condition here is the candle should close or engulf totally the bearish candle. And as we said, this is called morning star. This is bullish type pattern. Coming to bearish pattern, you have to just shift the color. First, it should be a green candle. Between any candle should be there. Color doesn't matter. And the third important thing is, there should be a red candle. Instead of green, it should be a red candle. And remember the same logic. The close should be below. In bullish thing, we will call it as a morning star. And in bearish, we will call it as a evening star. Hope you understand the basic things. And it will take time practice to identify it. It is not a one day go. Practice open the charts and keep practicing. Later we will discuss about some interesting thing. Hope you like it. And before ending the session, I will show you in charts. Quickly identify. What is this candle? Single bearish candle. What is this candle? Single bullish candle. There is no hard and fast rule that this the size. It should be comparative. By seeing experience, you will learn the things. This is single bearish candle. The same way, single bullish candle. This is the single candlestick pattern. Coming to two candlestick pattern. In two candlestick pattern, first bullish thing what we have discussed about bullish piercing. Bullish piercing, first candle should be a red candle and the second candle should be a green candle. It should close minimum above the median. Let's see where you can find it. Here you can see. This is the first red candle and then it is almost closing above the median. The same way, this is bearish piercing. First, there is a green candle and second, there should be a red candle. It should close below the median. Bearish piercing is generally not that much common. It takes time to identify. Okay. Can you name this candle? First, a red candle and again a green candle closing above. Comment in the section, what do you name it? Next comes the engulfing part. Here only you can see. This is the first green candle and red candle totally engulfing. Means bears are dominating. So this is called bearish engulf. The same way, this is also one red candle. First is a green candle and the red candle engulfing. Okay. Now comes bullish engulf. Want to show bullish engulf? See, first there is a red candle and again there is a engulf. It's called bullish engulf. Again here red candle and coming to three candlestick pattern. Bullish you will call it as a morning star and in a bearish you will call it as a evening star. Let's see and find it. See, first there is a red candle and in between neutral or candle and there should be a green candle closing above the median. This is called morning star. Try to find other examples. Just you have to train your eyes to see it. You can find out. It's a simple practice. You will get it. See. Can you call this as a morning star? Logically, no. Why? Because the condition is third candle, that is green candle, should close above the median. So this is not called as a morning star. What about this? Can you call this a morning star? Yes. First there is a red candle and again third candle closing above the median. Let's search for evening star. First there should be a green candle. Yes, it is there. And the condition is third candle should close below the median. Can you call this as a morning evening star? Obviously you true yes. So who is dominant here? Bulls or bears? Bears are dominant. One more interesting thing. Wantedly, I have missed one candlestick pattern to show the curiosity. In the next video, I will teach you that candlestick pattern and that is a very important candlestick pattern. These are the basic candlestick pattern that you have to know. If you open the literature, there are vast variety of candlestick pattern, but don't dump with the knowledge. Keep it simple, always keep simple, make your trading journey simple with ease. Okay, see you in the next video. Till then, bye, take care, practice, keep practicing. Every day you should get better, better, better.